Well, hello everybody. This is Kevin Shortell, and welcome to the webinar today. We've got a very interesting topic for you, and of course, I'm joined by Mr. Eddie Speed. Eddie, how you doing?
I'm good. How are you, Kevin?
Just excellent, excellent. Looking forward to this one. You know, Eddie, we do a lot of these webinars, and we talk about the numbers and the deals, and which is all important, of course. But there's also patterns that we've seen of success. I mean, we've trained enough people over the years to get a good idea of what's working, what's not working, and start to identify characteristics, if you will, patterns that other people, if they start to emulate, they should end up getting the same results. And that's going to be our topic today. And as important, I think you would agree, Eddie, is understanding the numbers and going out and finding deals. I mean, if you don't have these other things that keep you rounded and keep you focused and on target, it's going to be much more difficult to make it in real estate and real estate notes. Agreed?
You know, Kevin, you've got a son that plays college tennis, and I have a son that plays college football, and our kids call it the X factor. You know, it's beyond the speed, it's beyond the this and that. I would say that I think that's what we're addressing today is what's the X factor, and we included real estate because most everybody that does our business does something related to real estate. Some people never physically buy real estate, but real estate's our collateral. Then we have other people that split their time between doing regular real estate and notes, and lots of realtors and real estate investor types. So, and I tell people I'm not really a real estate guy. I've only owned 4,000 or 5,000 properties, so I mean I'm not really.
Yeah, aren't you? You're in the note business, though, right? Yeah, I know what you mean. Because they are. I mean, they're one and the same essentially. I mean, the note business is just the financial side of real estate. So if you've ever borrowed money to buy real estate, whether that's private money or hard money, anything like that, well, you've been in the note business. You've just been on the paying side, where we focus more on the note investing side, on the receiving side, obviously, of it. But they're so interwoven, and as you said, our membership base is very intertwined with both. And I think that's why we were able to really look at what is the difference? What is that? I'll use your words there because I like that. What is the X factor? What made the little difference there? And because both you and myself and the executive team and the coaches and folks that we have, we're talking with our members every single day, and we're talking with investors every single day. So with this long history and communication, I think that really leads us to starting to observe and ask questions, what's working, and really study those. And I've been very interested in that over the last several years, and that's where we kind of came up with these 4 cornerstones. But the other day when you and I were talking, you were mentioning some things that you were recently doing and how it came down to these 3 areas that you felt surround all of these 4 cornerstones that we're talking about. Go through that a little bit more for everybody, would you?
Well, and the 3 areas specifically that we talked about were focus, knowledge, and accountability. And I don't know if people use this language anymore, but an old-timey 3-legged stool, right? We've all seen those. And if you've ever sat on a 3-legged stool that wasn't all equal, you would be pretty clear about why you would want them to be equal, right? And I do think it's an equal thing. One of our keynote speakers at Note Expo that's coming up is a guy that I'm in a mastermind with named Jason Medley, and a smart guy, and he's had some rock star real estate investor types that have been a part of that, and then he's had people that weren't successful, and the bottom line was, we were talking about just that factor, and obviously that's part of what his keynote address is going to be at Note Expo, and he said it's focus. And we use the sports analogy. Your son cannot hit one of those tennis balls coming at him from another college tennis player unless he's focused on that ball, right? He can't be looking in the stands, and it's true in everything in life. So focus is clearly something that I don't care how much knowledge you have, I don't care if how much desire you have, if you don't have focus, you're not going to be the best you can be, and you may not be successful at all in many cases. Knowledge, you just can't replace it. You know, I hear the analogy, or I've used the analogy, and I've stole it from another guy that I know, and he says, you don't know if your gut feel is bad pizza or a great idea without knowledge. And that's the doggone truth. I mean, if you don't know, if you don't have a base of knowledge, you have nothing to measure from. All your gauges are wrong. You know, to use a flying analogy, right? I've been around a lot of pilots, and you know, they'll tell you in a minute, when you stop believing those gauges, you might take a dip in the ground. And so, you know, you got to know how to read your gauges, and your gauges are only going to come from knowledge. You can't be creative without knowledge. I mean, how would you know how to be a deal architect? I just spent a year and a half. You and I have worked a lot on this turnkey flipping academy. This whole how do you be a turnkey guy and a little bitty investor, right? Well, let me tell you something. If I didn't have any base of knowledge of understanding finance and understanding where there's inefficiencies in the market, the deal wouldn't make sense. It's because I saw these inefficiencies, the knowledge of understanding there was a market inefficiency that could be filled. That's everything. And then
part of that comes from the focus that you had, though, in the business. I mean, when you're focused on the business and you have all these external sources and information coming in, part of that focus is learning which ones allow bounce off of that and which ones you start to recognize where you can say, hey, there is something here, let me investigate that a little bit further, find out what the problem is, and then come up with a solution. And you're right, solutions come from trying things in the past, right? So and just
you,
in having
you and I could have never developed that training had we not had focus. It took a lot of focus on our behalf to go think through all the intricacies and when somebody experiences this, how are they going to figure out? It's just you're right. Focus, knowledge, and the last one, and this was one that I'll be perfectly honest with you, I don't think people put enough attention to, and that's accountability. You've got to have somebody in business that you can trust and that's going to help you stay accountable. If my wife is involved in the business, right? Your wife, Kevin, Kendra, is not involved in the business, okay? So you can't use her as the accountability of what all you're working on because, you know, that's just not what she focuses on every day, and so it, you know, that's not the right. She can realize if you're laying on the couch all day watching the Andy Griffin reruns, she can figure that out. But
you've been talking to my wife lately.
but there's a difference between you know, just working hard and working smart, and you got to make sure you're doing both. There's no replacement for when you're focused on it. You're working hard. You're paying attention, and you're zeroed in on it. That doesn't have to be 80 hours a week. That's a fallacy. But when you're there, you got to be there. And
right.
And then you got to have accountability. And I tell you, Kevin, going to trade shows, going to masterminds, I spend on the phone making trips when I'm out traveling and seeing people. I literally probably spend 20% of my time in the business. And I'm not saying everybody at Note School does that, but I try to bring that back and then have an accountability process for them. But I spend 20 or 25% of my time interfacing with people in the market, and we do learn a lot from students. We got some students with some crazy resumes that help us in certain areas. You know, they know markets. They know a lot of them are like super sharp at REO stuff and property and rehab, and we got a ton of technology people. You know, so we've got people that you know. That's important, but I'm just saying I believe all three of these components, focus, knowledge, and accountability, are that, to use that analogy, that three-legged stool, and they've got to have equal balance or your ride's not going to look as good as you want.
Right, and I always think with accountability, that just jumps to my mind of, well, you and I travel quite a bit, of course, and when you're on the road, it's easy not to exercise, and you don't have a tendency to eat at the right time simply because of the schedule and different time zones and everything else. And I think back to the best time I get the best results working out, even though I've got some knowledge of what exercises I need to do, is, you know, you join the gym and you have to show up, and I was paying whether I showed up or not, so I had that. Had that accountability. We're like, I'm darn sure going to be there because I'm already paying for it. Simple example, but I get your point on that. And you know, as I started going through this and working with some students and asking questions and kind of building up on this, you know, it made me also kind of reflect on my business, and I found that that's what really I did as well. You know, focusing on something and starting to tune out some of the negativity and really see where there's a particular method that you're going to do and perform upon and stay consistent with it and persistent with it. The knowledge, you know, working with other people, I've done a lot of that in my various real estate. You know, as you know, I've been in real estate, a lot of different parts of real estate, and I always kind of felt that if there was a weakness I had, I need to identify that, and I think that's part of focus, identifying your weakness and then gaining that knowledge through bringing on a partner or something else like that I could learn what their skill sets were. And again, having accountability, if you don't have a person or another entity or something like that to be accountable for, you really have to set that. I think that's where kind of goal setting comes into mind. And we're working with some people right now, for example, and as you know, they've been sending out direct mail and they're making fee income in the business and making good fee income, and then we're now holding them accountable from one call to the next to make sure they have gone through a specific agenda, and I think that's going to tremendously help them, and I know that's why you've incorporated it into those calls.
Well, and in that case, you know, if you're going to do direct mail, if you're going to buy seller finance notes and you're going to do direct mail, and there's probably been less than a dozen companies in the United States that have ever mailed more than a million pieces of mail in our whole industry. You know, from 30 years back on, I've mailed about 5 million pieces of mail. So I've had myself and a lot of staff that have been on the phone talking to these note sellers, and I tell these people trying to buy notes, you know, the note buyer, the relationship person, I'm like, you need to expect them to say no when you first give them the price. I mean, when they have a $100,000 note, you're going to offer 70 grand. What do you think they're going to go? Oh my God, that's great. You know, only a $30,000 discount. I'm only losing 30 grand. You know, I mean, plus interest. You know, I mean, so you stop and think about it, and it's kind of like, and so then you get into the psychology of what I refer to as a selling cycle, and that is a good example, Kevin, of accountability, and you know, it's an emotional thing. There's so many aspects of this business that the accountability helps, because, you know, the truth of the matter is, if you're an entrepreneur and you think it's going to be all smooth sailing, you know, in the next 10 years, and you're not going to have anything that's going to kind of drag you down emotionally, you're kidding yourself. And anyway,
I had one of our I received an email from one of our folks, and they sent me a testimonial on a deal like that, and they said, you know, Dave was here when Dave said he would be there, he was there. When he said he would call, and he was able to do this, and he was able to show me that, and it's you know, makes total sense. That, I mean, Dave is totally zoned in. He's totally focused on it. He knows the business, and he holds himself accountable and gives himself deadlines, and he gives the other party deadlines. Say, here's what we need by then. Here's what we need, and he guided them through the deal. And obviously, that's a pattern of success that we're looking for, because everybody that gets involved in real estate and real estate investing, I mean, they're all there wanting successful investments. I mean, that's, at the end of the day, that's what everybody on this webinar is from. That's what you and I are all about. That's what we teach, but that's what we live also. And it would be nice if it was just this, like this puzzle is building in front of us here, but that's not the reality of it. When you're going into these things and you're thinking of building a repeatable process, right? I don't think people get on this webinar. I don't think they they come and see us or go to other events, whatever it is that they do, I don't think they do that just to learn how to buy one piece of real estate or buy one note. They're looking to do a repeatable process, and it would be nice if it was just do this, do this, do this. But again, you're working in real estate with some unknowns, and you're working in real estate notes with some things that are outside of your overall control that influence that decision. So when you're trying to build this successful investment, you really need to think in terms of it as just like you would do with a jigsaw puzzle, and that is, you don't build a jigsaw puzzle by starting in one corner and just building over and building over. When you do a jigsaw puzzle at home, what do? You build around the corners, and those really become the cornerstones of the puzzle, and then you start to piece the rest in. And I like to use that analogy because it's just like, building a house or whatever it is. You have to have a plan, you have to have a certain order in which you do things, and that becomes your cornerstone. You don't want to build, as they always say, you don't build a castle on sand, right? You've got to have a good, solid foundation. So for everybody on this webinar with us, if you're looking to build a successful real estate investment business, real estate note combination, whatever it is that you're doing in the real estate realm, which obviously notes is a part of, these are the 4 cornerstones that we've identified by training for years, by interviewing people, by really gathering the data. I'm a student of the market. I like to study and research things, and Eddie sees these things and identifies these things as well, and then we go back and factually gather information and make sure that we're on spot. And this is really what we have identified as these 4 critical components, and that's dealing in top quality inventory, which we'll explain, coming up with the creative aspects, the creative solutions, because inevitably in real estate or notes you're dealing with problems, and problems all have solutions, and the more solutions you have, the more problems you can solve, and therefore the more opportunities that you will see. It's certainly not a business of one. I remember back in my real estate investment days when I was doing rehab properties, buying property, fixing them up, and reselling it. I had a guy who was trying to wear all hats that I had met. He was finding the properties, he was fixing them up, he was funding them, he was selling them. He had a small rehab crew he worked with, but I was amazed by the number of properties he was able to do wearing all those hats. But what he found was, and what you will find is, what I personally have found, Eddie has found, is outsourcing, building relationships where you can have other things accomplished will really enable you to take your business from a transaction and really build it into something special. And of course that can require some guidance as well. And there's a lot of sources out there that you can use for proper guidance in the business. And word of mouth, I think, is a very strong component of that. Learning from people who have done it, that's a big component of that. So these 4 cornerstones, if you're looking to build the business, that's it. And that's really going to be the main focus. We talked about patterns of success, but the main focus of this particular webinar is going to be on those 4 areas. So now that you know what these 4 areas are, Eddie, let's go ahead and break down each one of these areas, and we'll just start on the upper left here, which is top quality inventory.
Well, in buying non-performing notes, there's 3 things, Kevin, that'll make you make a bad buy. Okay? One of them is the property itself. We call it blighted. Now, that could be a blighted neighborhood or a blighted house. Basically, it's not worth putting money into. Mm-hmm. And we deal in working class notes, working class areas, and we do that for a reason. You say, well, why don't you buy notes on big, fine luxury homes? And the truth of the matter is, those loans trade at such a discount, such a low discount. We just, the margins are too thin, and we chase the type of assets that these big, gigantic capital funds, hedge funds, are buying. They're buying the higher end, but they're paying 70, 80, 90 cents on the dollar for it. And literally, and so we don't buy that. We buy loans at a much deeper discount, but it does require a better filter into the property itself. So, so there's 3 things. The riddle goes like this: 3 things will make let you make a bad buy, or would allow you to make a bad buy. Blighted property, tax, and title. And I know we don't have them exactly in that order up there, but that's really what it is. And so the paperwork itself, you need to make sure that you have a valid foreclosable lien. And this isn't brain surgery. I don't want to act like it is. This is probably where you got to have some. Certainly, you got to have some knowledge. You know, common sense is not going to do you any good unless you have some common knowledge about how it's supposed to work. There's just not going to be a replacement for it. And that relates to title. You know, you know, the best way I have learned, honestly, with title is you just have to get in a position where you can look at title and go through that stuff enough, it starts resonating with you. We have, our executive team has a excessive experience in buying discounted notes. I mean, we've closed over $3 billion worth on our executive floor. And I walked by Susan's office this morning, who's probably the best closer I've ever met in buying discounted mortgages, and she's got a question. She says, you see any issue with the fact that Mr. is vested in title and Mrs. is not vested in title, meaning the property was deeded to him, but it wasn't deeded to her. She signed the note, and she signed the security agreement, which could be a deed of trust or a mortgage. And we talked through it. On the surface, it sounds like there's no problem because, you know, many times people that only qualify, Mr. or Ms. only qualify and get a mortgage, then they're required to sign the mortgage itself, but they don't sign the note, right? But they're entitled on the property. In this case, it's kind of the opposite. So this is an example. By the way, we spent 5 minutes and talked through it. As seasoned as we are, we spent 5 minutes and talked through it, and we beat it up back and forth, and we decided, I said, you know, that's an example, and we're actually going to talk about it on the webinar today. Even if you're seasoned, you sometimes got to talk through this stuff, you know, and now that doesn't mean that if we couldn't come up with a solution, we wouldn't have an attorney on a power team that we call and, you know, that get them involved. But that's an example of, as you said, Kevin, those are all relate to inventory. So a lot of times people can recognize trash. I see a lot of times, Kevin, people walk away from deals they shouldn't walk away from. Because trash on the surface doesn't mean that it's trash underneath. And I see it a lot where people are looking at a deal and, you know, you got a non-performing note that's been foreclosed on. And guess what? When they move out, they don't take all their stuff with them, do they, Kevin? Never. Right. You're going to need a trash out. And just because the house looks trashy doesn't mean on the outside that it's not a pretty economical fix. And that's kind of an example of, you know, some of the deals that we see that are very lucrative. You just got to peel the onion back a little more before you get to it and figure out whether you can live with it. So that kind of talks a little bit about paperwork, title, and valuation, and, you know, just in a lump sum of we buy imperfect. We buy imperfect notes. We buy loans paying, but they're not a Fannie Mae standard. We buy loans that aren't paying, that may have been a Fannie Mae standard, but the customer defaulted 4 years ago, and that's all gone. And so we buy loans that have a degree of imperfection, and kind of gets back to what you said a moment ago, Kevin, talking about, you know, just being that problem solver. You know, and today there's so many vendors that can help us be that problem solver, but you got to be that problem solver.
Yeah, not to just to clarify for everybody too, because top quality inventory doesn't. We're not relating that to a higher price property or it's in much better condition, because quite frankly, you know, top quality inventory could be properties that are not in good condition, but the value is there, because every property can be fixed, right? Every note can be fixed, but there's always a cost in both time and money to fix it. So we simply have to determine through valuation if those numbers make sense. So that's what we're really talking about in top quality inventory, is the money there, and is the paperwork and the title there as well, because I see this all the time in our classes, but I kind of tease the real estate investors investors a little bit, and I'm not picking on them because we all are, but it's amazing how many times, and I bet everybody on this webinar has been guilty of this, they've gone to a real estate closing and just did this number, right? And they're just signing documents while the title company person is going, well, that one, so we didn't do this, and that one says this, and that one says that. Everybody's just signing away. And if you really want to avoid mistakes and get higher returns and things like that, understanding the position that the property is in, as you were saying, are all parties signed off on that? I've been to foreclosure auctions, for example, where I've seen people bid on things and they didn't realize it was in second position. They're buying a foreclosure from second position, only to find out afterwards, well, what can I do? You can't do anything unless you want to pay off that big first note. So it's very important and I think often overlooked. Go ahead.
I said now they have experience.
Well, yeah, experience costs money, right? So, yeah, and that's the whole point. And I think that is definitely something where real estate investors or real estate note investors are a little bit different. The ones that have that note background, they look at the paperwork because they've learned, hey, the devil's in the details, as they say. Where is this paperwork-wise? Do we have a clear title on this one? Are there any other liens that are affecting this? And again, is the valuation there? So there are certainly transferable skills in real estate notes when it comes to valuation. Because at the end of the day, whether you're buying real estate or notes, with notes a lot of times we take the thought process of we may end up with, in fact we think of it every time, whether we buy a performing note or non-performing note or anything in between, we may end up with that property. So it's important to us that we understand what that valuation is in its current condition after rehab, also its income approach, which is becoming more and more important to real estate investors today over the comparable sales approach. So these are new things in a new industry shift that are really starting to change, and it does come back to the fact that some of the folks on this webinar are going to have to sharpen their skills on some of these items and looking at valuation from two approaches versus one, looking at and understanding the title positions, but also making sure all that paperwork is done and set up the right way to ensure any kind of mistakes in the future. That's it. So creative-wise, this is where obviously your expertise is. It's you and I are we both look at deals in their totality. Here's what I mean by that, everybody. We look at the numbers. Do the numbers make sense? And then what's the story behind it? What's involved with the people? Where's the pain? That sort of thing. What's interesting about Eddie and I is, although we look at both of those, we're wired differently to look at things first, right? I'm going to take a look at the numbers first because I'm just kind of wired that way to look at the numbers. Then I'll get over to the story. Where Eddie's more of the creative guy, just going, forget about the numbers for now. Just tell me what's going on, and let me work from that, and then you'll get over to the numbers. So I guess bottom line in telling you that is you can approach it from either side, but as long as you understand that there are two sides with that, because bottom line is problem solving here, and that's in regular real estate, and that's in the real estate note business.
Kevin, we do these speaking gigs around the country, and you're out a lot. Joe Varnador's out a lot. Kevin Moore's out a lot. I'm out a lot. I mean, we got some heavy-duty staff with some crazy level of experience that they're speaking at audiences all the time. And I do this frequently when I speak. I don't know that I do it every time, but I do it frequently, and I know you do too. And you're sitting in a room, or you're in a room, and you've got real estate investors, and they kind of got it in their mind a little bit. Look, I'm a realtor, I'm a real estate investor, I'm not really a note guy. What you're saying is interesting, but I really just want to be a real estate guy, and I don't want to do notes. They kind of get that in their mind a little bit. And I think part of what our job is to show people, look, we're not trying to drag you out of real estate. We're just trying to make you better at the real estate you do. And I'll give you an analogy of it. I'll be in a room. I spoke at a RIA a week or so ago, and actually here where I live in Dallas. And so I asked the audiences. I said, none of you think you're in the paper business, or most of you don't think you're in the paper business. But let me show you what the paper business could do. I said, how many of you have bought a property or worked on buying a property in the last year, and you couldn't agree upon the price with the seller? Now, you figure everybody in the whole room raised their hand? Of course they did, right? And I said, okay, how many of you own those properties? You can think of a scenario where the guy owned it free and clear. So, you know, maybe half of the room raises their hand. Maybe somebody didn't have a free and clear house, but at least half the people said, I have not closed on a house that I wanted to buy because I couldn't get together with the seller on the price, and they owned it free and clear. Mm-hmm. And I said, okay, how many of you, every time that happens, you always make 3 offers to them at the same time? You have a cash price, a terms price, and a ridiculous terms price. You pick the price, Kevin, and let me pick the terms. If you're the seller, you pick the price and let me pick the terms, right? And as simple as that is, and that's not complicated. Now, when we get to note school, we actually we backdoor and figure out how to, you know, run the math to figure out when these are equal actual values up front, cash and terms and whatever. But I can tell you that that gets to the emotional side of a seller, and it's why you said I like to get to the story. Because I know somebody's like, by God, my, you know, neighbor down the street sold their house for $80,000, and I want to sell mine for $80,000. I'm looking at it going, I'd never pay more than $50, right? But the reality is, if they want 80 and that's what they're going to fall on the sword over, trust me, we can figure out a way to get them the price they want and us get the terms that make it a phenomenal deal. Now, whether their neighbor really sold the house for 80, who knows? And whether it was the same, I mean, there's no point in getting into that brain damage, because that is what their perception is their reality. That's an example of being creative on the note side, but not exactly the way you're thinking of notes. Maybe you're thinking more like buying a note or owner financing and creating a note. All of that's the note business, but you're using the note space and knowledge of the note space on the other side of the equation in a creative way. So, yes, Kevin, you got to understand the numbers. You can't be a deal architect and not understand the numbers. I would say that a fairly high percentage of the people that are on this webinar have probably seen us do the little analogy with the buying the whole note and then flipping off and selling the front end of the note, and you have $100 invested and you own the back half of the note, right? You buy the whole cash flow. The whole cash flow looks like this. Then you sell half of the cash flow, the first half, and then you keep the second half of the cash flow. Does that make sense? Mm-hmm. And when you sell that first half of the cash flow, the investor writes a big enough check to virtually pay for the whole acquisition price that you paid for all of it. Well, listen, if you can't run the numbers, you can't back into what that would be. You've got to be able to run some numbers and do it, and we refer to that as being a deal architect. And then, as you said, Kevin, I like to get to the flavor of the deal. I like to understand the emotional aspect of whomever I'm dealing with. You know, people, there's a lot of confusion between bartering and negotiating. Bartering is exchanging price. Negotiating is finding out what somebody wants and needs are and figuring out a way to meet their needs. That's the difference between bartering and negotiating.
Mm-hmm. Yeah, and I would say everybody on this podcast, when you're looking at podcast, webinar, I guess they're almost the same thing these days, but the you know, the learning points here are when you're dealing in real estate or real estate notes, it's always examining certain points to see if you're dealing with good quality inventory, because that's going to relate to the solutions that you have here, and start thinking through these deals both in terms of numbers, but also finding that flavor, that pain point of these the individuals behind it, because real estate is that. Real estate is still a people business. The real estate note business is still a people business, and what we want to do is examine both of those to come up with the best creative solution. And that's why that offer, that example Eddie was saying of something creative, of showing 3 different three different approaches of coming up with a number or solution to the same deal, and having the other party pick can be such an effective way to do things. And all investing, of course, is dealing with you're hoping for best case scenario, but you're always preparing for worst case scenario. So as you think through creative solutions, don't think in terms of one exit strategy in business. Don't think in terms of one out when you're buying property. Don't think in terms of one out when you're buying a note. You have to be creative enough to come up with multiple exit strategies for you, because there are, again, some influences that are simply out of your control, and that's where that entrepreneur's risk really comes into place. And if you're prepared for worse, and the worst case scenario is you're still making money, then you have effectively eliminated or reduced your risk quite substantially. And that's where the creative aspects have seen. And by the way, in upcoming webinars that we're going to have, boy, I've got some great, I'm getting a lot of case studies coming in right now, so we're going to share a lot of those with you on other webinars coming up. And boy, it'll really illustrate how the investors who bought these deals were able to creatively work their way out of solutions, and those solutions were favorable to all parties involved, and they're really going to show you some insight. Got some really, really good case studies that we'll be able to share with you coming up on the next webinar. Let's talk about relationships, and again, that whole thought process of relationships is knowing when to outsource things and knowing when to take things on yourself. If I could go back for a minute on my example, where when I was doing a lot of rehabs, my Achilles heel was I didn't know the rehab business. I'm not by any stretch of the imagination a handyman. I'm just not. And I at least recognized that myself, and I hooked up with that guy who was doing quite a number of properties every year, but wearing all the hats, you know, the fixer-upper, the real estate guy, the sales guy, the finance guy. And I came in my first year and doubled the number of properties he was able to do, and I simply was able to do that because I outsourced swinging a hammer. You know, I outsourced those things that were costing me what I perceived as costing me money, because instead of me working on a house for 3, 4, 5 hours, which I wouldn't have known how to do anyhow, but if that's what I was doing every day, that took me away for 3 or 4 hours looking for other opportunities. So building relationships, and today so many different ways that you can do that through the real estate clubs, through the meetups, through attending events. I mean, getting out there and building up those relationships, today it's remarkable, because I just don't, and maybe I'm wrong in this, but I just don't recall having this many sources today that you can go to, especially on the note side of this, that you can go to have these services done. I just don't recall that 20, 30 years ago when we got started in this business. So
I tell you what, the trip switch, Kevin, that started it is the 2008 debacle, and you had all these loan servicers that were centralized. They weren't in the neighborhood, and so then they were servicing loans all of the United States, and they had to have boots on the ground go do things for them that they couldn't go do for themselves. And this and that is typically, that industry is called the property preservation business. And that went from, honestly, kind of an infancy stage. It was around in 2000, but it wasn't that common. By 2010, because of all of this inventory of defaulted loans, you got a defaulted loan, people have vacated the house, Kevin. That house has got to be secured and it's got to be winterized. I mean, we're getting in the middle of October right now. I can tell you right now, if you got a house up north and it's not winterized, you got a problem.
Yeah.
So those are all the services and things that, as you said, years ago we'd have to go stop and figure it out individually. Now it's no big deal. And I was telling somebody not very long ago, I said, we buy assets all across the United States. I have lived in an era where I bought most of the assets right here in the Dallas-Fort Worth area. That was many years ago.
Mm-hmm.
Back then, we used to load up and go what we call ride property. And I mean, Dallas-Fort Worth is huge. There's like 8 million people in Dallas-Fort Worth. And it's 100 miles from the east side to the west side. You can imagine getting out there in traffic, and you've seen Dallas traffic, You can imagine getting out there in Dallas or any market and trying to go run across town and look at all this kind of stuff. I had a guy in this mastermind that I'm in that bought foreclosure property. So he was looking at pre-foreclosure lists, and they were trying to look at and I think it was like 400 properties a month. The guy was in Houston, and I was at a mastermind, and I'm like, you just need to hire a property inspector. They'll go out for less than $25, particularly if you've got volume. They'll go out and look at this house for you and take a bunch of pictures, and you don't have the brain damage of going and riding and looking at all of these houses to go figure out the 10 or 20 you really want to focus on. Now, this guy was doing scale. He was buying a lot of properties, and not many. Every operator is going to be that big. Well, here's a real estate investor, a local guy, mega seasoned, and he never thought about hiring an inspection company that the banks hire every day of the week to go do inspections on houses. So that's an example of outsourcing that note people kind of are accustomed to, that if real estate investors knew more about the efficiency, they'd do it.
Yeah, and outsourcing to the right people too, which comes into play of vetting. And today, there's a lot of vetting that's being done on websites. Certainly, if you're active in a again, there's meetup groups today which we never had. There's of course the RIAs and things like that you can go to. And I personally think word of mouth is probably the best. If I have other people who are in the same business that I'm in, and getting to know those people and finding out what sources they're using, I think that's the ultimate. You may not be able to do that right away in your businesses, but getting online and looking at various sources and really doing some research on that today is something that we didn't have before. So I don't think the process of vetting is as difficult today as it used to be. And it used to be try somebody out, and it's going to cost you a little bit of money to try that. But today, I think, and everybody on the webinar should be able to talk with people in the business and learn who the better vendors are. Websites, I meant, by the way, like Angie's List, or other people who have. And what's the other one I use with the Fixing Up the Homes? It'll come to me in a minute, but Fixing Up the Homes, where other people can recommend.
Lawn Love.
Yeah, Lawn Love is another one for landscaping services, where you can see all of that sort of thing. So it doesn't have to be vetting a big process anymore, but you do want to at least put some effort into hiring, obviously, the right people, and building those relationships. But learning their limitations and their areas of expertise are just that. And I think when you ultimately, at the end of the day, see that, you can keep your eyes on the next deal. And I believe to really grow a business, and everybody I talked to and coming up with these cornerstones, everyone I talked to came to that same conclusion. Initially, they may have started by trying to, do like they say in Texas there, Eddie, I learned this one from you, they wear a belt and suspenders, right? They're trying to really just double check everything, and as their experience starts to grow through the business and they start to develop these relationships, you can then start to let some of these other things be done, and then you're just keeping your eyes on the deal. I think today everybody should be able to accelerate that, and that is one of the keys. There's no question. If you really want to build something from this, you're going to have to start to outsource some things, and that's going to require that you build relationships. So to do any kind of real estate or do the note business at home and just think you can just work on your computer and never work with anybody and never get out there and meet other people in the business, you're really setting yourself up for a limit of growth and a limit of acceleration of growth, because these relationships are important for you, and they will enable you, once again, all these things relate, to do more creative things, so you can focus on the more important things. Is the valuation there? Am I dealing in a good quality inventory? Is the title good? Is the paperwork all there? That's really where your expertise is going to be. These other things you should know about, and then be able to outsource those to other folks.
Yeah. And
all
right.
Right.
Efficient in your time.
What's that?
You didn't take the time it used to. I mean, you can work on more deals because the availability of all this outsourcing and relationships is just crazy when you had to physically go out there and do things yourself all the time, and you don't have to do that anymore. It makes it the realization of being part-time a lot more of a real deal.
Yeah. Well, just for example, I was talking this morning on a conference call, and we were talking about earning fee income in the note business. It works the same way in the real estate business, which is essentially wholesaling a deal. Back in real estate, that's what they called wholesaling, where you got a deal under contract and then just sold that right to buy, which is what the contract was, to somebody else. You just wholesale the deal. You can do that same thing in the note business. You get the right to buy a note, and then you can have somebody else actually fund the deal and make a fee in there. We call it a spread in the business, and we were having this conversation about that. And initially, the person's like, oh, I don't want to send out a bunch of direct mail because that's the best way today to find those folks. I don't want to just send out a bunch of direct mail and I'm licking envelopes and putting stamps on stuff. It's like, no. It's not what we're talking about. You want to outsource that. That just costs you time and money where it shouldn't be focused. What you need to do is set up that whole system where once they get the mail, what happens next? What's the triggering event? Is that they're gonna call you, or are you setting up? You're going bigger time into texting or all these different things that you can do today. But that's where you outsource all that stuff. So he sent out the initial 1,500 letters that he sent out. Now again, he didn't touch a single letter, he didn't write a single letter, he didn't fold a letter, he didn't send an envelope, didn't do any of that. Completely outsourced that to a marketing company that sent them out. He sent out 1,500, and he ended up now has 7 potential deals where he's in conversations with, and that's where he's going to make his money, because again, now he's in that phase of how can I work with these folks? Where's the happy medium here? Because they want to sell their note a lot of times. Of course, Eddie, you know this, but a lot of times they want to sell for full face value. That's not how this works, right? So it's going to be a discount. So there's a negotiation taking place. So he's in that creative mode of doing this. He's certainly not going to focus on direct mail. I wouldn't wish that on anybody. Back in the day, I do remember that's what I had to do because we didn't have these sources, and that's a great example of that. All right, guidance. Guidance is another one here, and on guidance, I think first of all, the thing that came to the forefront, and again, a lot of the people I talked to about these concepts, they said the first thing is I had to have a willingness to learn, and I think this goes to our more experienced people on the webinar where they've got some knowledge in some areas of real estate, almost to the point where they go, yeah, I got that. But when you start to drill down into the paperwork, for example, what's the difference between a land contract, a deed of trust, and a mortgage? And a lot of people say, yeah, I've heard, yeah, I got that. And they go, okay, well, outline it for me. Write a little paragraph here. Give me some bullet points, the difference between those and what you can do. What's the forbearance? All these things that are so important to us, they may have heard of, but they almost like, well, I'm in real estate, I know this already. And the fact is, they really just know enough to be dangerous, and so their conclusion, I think that's the first thing. I'm on the other spectrum of this. I love learning from other people and figuring out different ways that they do things. I mean, heck, there's things I'll call you about, or I'll call Charles about, and to get more insight, to get more information. But I think that's a key component initially to even be open to accepting guidance from other folks.
Yeah, and
second thing is understand. Go ahead.
No, I was just going to say that, it goes back to, and the guidance really goes back to what we referred to as a relationship, and you've got, trusted people that have good knowledge and ways to bounce things off of, and we've put a pretty high emphasis on this today, because I can tell you that a lot of people think, well, note school must teach mechanics, or when Eddie and Kevin are out there doing the business every day, it's just mechanic. They're good at running numbers. They know how to evaluate what to pay for a note and stuff. And I'm telling you, honestly, at least a third of our time, or half of our time, is on the other side of the fence. It's not just knowing what to do with the numbers. It's how do you get the information, and how do you know it's the information you really need? And it's, you've heard it referred to as a power team, and but that's what it is. It's without that team, you don't have the power you should, for sure.
Yeah, it's same thing. It's when I got into the rehab side of the business years ago, again I was willing and needed to really learn the rehab business, not how to physically do the work. What I needed to learn was to identify what needed to be done, what's it going to cost me in time, what's it going to cost me in money, and who do I hire and how do I pay them right? Those were kind of the ingredients of doing that, and I paid a guy to walk me through every house for my first year, and ended up doing 22 properties that year, and paid him $2,000 on each one. So good for him, good for me. But it was, again, recognizing that you have to first be able to do that. Going in blind to a lot of things, you're going to make a mistake on that. So I think the willingness is there. I think people who are newer to the business, they do have that willingness to learn more. They're eager to learn because they realize, hey, this is something new. So wherever you are on that spectrum, I think whether you're at the top of your game, there's always some new things that can be learned, and by having that willingness to do that. And I've seen people hold their business back before because they weren't willing to do that. Everything has a learning curve. That's really what it comes down to, and it's just understanding that there are going to be some things that speed bumps, I like to call them, that you'll have to get over. And it's certainly helpful if you've got somebody who's got some experience in the background. And again, in today's world of social media and everything else, building up a team like that, what Eddie called a power team, it's a very I can't tell you how many people I've seen have their meetups grow from a handful of people to dozens, if not in a couple of cases hundreds of people. And they're all interested in sharing the experience of what others have done, and that's really a part of this whole process as well.
Yeah, I know we need to wrap it up here, but we've talked about it a lot. Just having people with experience and experience of others, and we laughed about that a little bit later, but I have definitely seen people go to foreclosure, like you said, foreclosure auction, and buy a defaulted loan only to find out it wasn't the first, it was the second. And we're not laughing at their bad investment, but we're just saying you gotta make sure that your sphere of influence and that kind of thing has got the experience and competency to go do it. So.
Oh, and that you just triggered a thought too, where it always when you're looking for this, you want to work with people that can take you up another level. In other words, what I mean by that is I've seen investors get together before, and I've seen this at clubs and all sorts of things where people go, well, yeah, I'm going to partner with so-and-so, and I'm like, okay, what's their experience? Well, they're brand new like I am. And I'm going, okay, so now there's two of you, that are brand new that don't know a whole lot. I think you're better off working with other people who can kind of bring in that next level. So keep that in mind when you're at your meetings and all those sorts of things, or at events. You want to learn from people who have the experience that you don't have, and that's important as well. So again, whether you're in the real estate business, whether you're in the real estate note business, this is what we have seen, and this is from a lot of successful people that we have worked with over the years, and really just working with them and coming up with what they are. So we highly recommend, if you are looking to really build this, if you're just buying one note or a piece of real estate, a lot of this you won't really need to do because you're just not building up on something. If you're looking to build upon this, keep these things in mind. The top quality inventory, make sure the value is there, make sure you understand the paperwork. If you have weakness on that, read up on that stuff, learn about the paperwork behind it. It'll open up more opportunities for you, more opportunities to solve more problems, which is the creative aspect of this. And again, study that. What are other solutions? What are other things out there? Leased options, for example, are coming back. Seller financing is coming back. What's going on in the industry? And you can learn a lot of that by using free online sources like dsnews.com and oh gosh, the M Report, and reading things in just your general publications of Forbes and all that that you can get online, looking at the trends, what's going on out there, looking at some of these creative solutions, would recommend that. Don't try to do everything yourself. You really can't build a business. You can't build a real estate business, no business, or any kind of business if you're doing everything. You're going to simply have to build those relationships. So get out there. Don't think you can do any of this business just by sitting behind your computer. We've never seen it really happen that way. And guidance. And guidance can simply start with meeting other people who are doing the same type of investments that you want to do. And of course, you can build that up with other sources. And if you do that, you'll have a nice solid foundation. All these other pieces you can start to build within. All right. We do have the expo coming up, and I know some of you on the webinar have established interest in that. And I just took this little snapshot, by the way, this morning, Eddie. So the time's going to be a little less than that right now. But what can you tell us about the expo?
Just a few less hours, right?
A few less hours, yeah. 16 days, a few less hours now.
Yeah. So Note Expo is the 4th and the 5th. If you haven't considered it and you really are wanting to kind of take your note business, this is a good spot to kind of help address those things. And we really, to be honest with you, Kevin and I, most of the webinars we've done have been creative, or they've been case studies, or how to structure a deal, and we sit down and spend a lot of time talking about, just what we hear in the market when somebody's getting started or thinking about it, or somebody's like progressing to the next level in their business. And so that's why this is a piece of the business that we've talked about today that is equally important to just showing you case studies. We'll normally do case studies. That's what their normal focus of it is. But my whole idea in coming up with the idea of Note Expo, and it's not Note School, it is Note Expo. So it's not a class. There is good information. There's super knowledgeable people there. There's lots of networking. There's lots of power team relationships that are there, but it's not the same as this isn't like coming to Note School and sitting in class for 3 days and feverishly taking notes and that type of thing. But it is a marketplace. And anyway, if you haven't considered it, you probably should. Anyway, it's noteexpo.com. You can look at it, and we've got some rock star speakers and folks that are going to be there, and I think the biggest thing that we put an emphasis on is that in our buying and selling notes, this is an environment where we invite our competition, and they're there just like we are. So it's not promoting us. It's just it's a marketplace, and we did it for some of the reasons that we talked about on the call today. That wasn't necessarily the purpose of the call today, but we're just saying we do realize that people say, well, where can I find these vendors, or where do I look for this, or they talk about trusted relationships, and like I said, we spend a lot of energy trying to solve that for our own account, and we certainly see it within kind of the family of people that that do stuff, and whatever level you want to take your business, our hope is that we can help point you in the right direction to say this. If you want to take this to a different level, these are kind of the checklists. This is kind of the components that you'll have to do. Mr. Shortell?
Well, let me give one thing I meant to mention there, Eddie, before we go. A little homework assignment for you. If you want to take this and really start to put this into application, I'd get out a sheet of paper and start thinking about in each one of these what you can do to improve your business in those categories, and I think you'll be well served by that. Thinking of where you can go to do all these sorts of things, I think you'll find that you'll be well served in doing that. So if you're looking for a little takeaway from this webinar, do that. 4 sheets of paper, start writing down some bullet points on things that you can do. And if you're looking for the website, it's just NoteExpo. I put it on the top there, notexpo.com. So sorry, Eddie, just wanted to get that in.
No worries. And I know we had people that were on the board today and typed in some questions. We had really a full hour of kind of a content that we wanted to kind of take it through, so we didn't really open it up for questions today. We are thrilled to answer your questions, and you can send a question simply to info@noteschool.com, info@noteschool.com, and then we'll get it to the right folks, and we will be able to answer your questions. So we were out of time,
great.
but we're not out of desire to help you.
Exactly. We've got some great webinars I got planned coming up. So you talk about some good case studies. I've got some doozies. So looking forward to that. Thank you as always, Eddie. Thank you everybody for being on the webinar. Do hope you enjoyed it, and look forward to talking with you once again.
All right. Have a great day. Thanks.